Hi, I'm Holly from Accrual Mistress Bookkeeping and Consulting, and today I'm going to walk you through not only how to reconcile your accounts, but show you why we actually have to go about this in the first place. So one of the first areas that I actually look when I am possibly taking on a new client and want to see what kind of work might need to be done in their file is their balance sheet, and I'm going to show you why. So if we look at the balance sheet, there are a few things on here that would give us a hint that there might be some missing information in the books. So if I go ahead and go to reports over here on the left-hand navigation menu and then standard reports, and then select the balance sheet here, I would want to look and check for just a couple of quick things. So first, I want to see that all accounts that should be positive are positive. Now, I'm not going to say that there are no negative accounts on the balance sheet because this can sometimes happen, but all the cash accounts should be positive. Any asset accounts should be positive, and any credit card accounts should be positive. You can have things like accumulated depreciation or amortization, those might be negative, and you might also ultimately see negative numbers in the equity accounts, okay? Owner's investment, retained earnings, and net earnings can all be negative numbers without drawing any red flags. But let's look at this particular example here. I am actually seeing that there is a negative balance for the Business American Express credit card, and to me that says one of two things. First, it is entirely possible that there are just missing transactions, things that haven't yet been added to the bank register that should be added, and then it will be resolved once I reconcile the account. Or, also possible, payments have somehow been duplicated to the card, okay? Now, I wanted to show you what these errors can actually look like on our reports because they can mean that our reports are not complete and are not accurate. So this is what we are doing with reconciliation. We are going through and we are reviewing all of the transactions that have been entered in our books against what our statements are showing us. Because at the end of the day, even if we're using our bank feed, errors can occur that throw these numbers off and that mean that we don't have complete and correct data. Now, reconciliation is basically just a fancy way of saying balancing your checkbook. Like I said, we're literally going to look at the statement, we're going to look at what is on our books, and we're going to confirm that the two line up. So let's go ahead and get started with that process. Now, you can do that in a few different ways. I'm going to go back to the home screen here and show you how to navigate to the reconciliation screen. We can do that by going to Accounting, and then from this left-hand pane that pops out, we can select Reconcile, okay? Now, you can also do this if you are already in a bank register by clicking Reconcile in the upper right-hand corner of the screen. But we're gonna go ahead and go into Reconcile this way right now. I definitely recommend reconciling on a monthly basis. But this video is primarily to demonstrate the fact that if you're using the bank feeds and if you're using all of the systems that are in place in QuickBooks, you can get through a whole bunch of reconciliations in a very short period of time. Now, if you're doing it monthly, you might not have to do quite as much back and forth as I'm going to be doing. What I generally recommend if you're catching up a whole bunch of time, instead of going all the way through and reconciling one account, I recommend reconciling each account in turn. So let's say you have a checking account, a savings account, and a credit card, which is what we actually have for the example I'm going to show you. I would recommend reconciling the checking account, then reconciling the savings account, then reconciling the credit card, and then going back to the start and doing those three in that order again. And here's why. If there are any issues, if there are any transactions, specifically transfer transactions or payment transactions between accounts, we want to make sure that those are all lining up correctly and that we're not going to have to undo and redo reconciliations in order to correct errors that we can catch and correct before the reconciliations are finalized. One last thing to note here, you as a business owner, even if you are the primary admin of your QuickBooks account, you may not have the ability to undo a reconciliation. Now, quite simply, this is a kind of fail-safe built into QuickBooks to help avoid fraud and issues with regular users. If you have somebody going in and reconciling your accounts that is in-house, you don't want them to be able to undo and redo a reconciliation at a later point because it can be used to hide fraudulent transactions. That being said, it also does kind of serve as a disservice to you if you end up having to go back and undo and redo reconciliations because of errors that have happened. So that's why we want to be really careful, really diligent, and really strategic about how we approach this particular issue. So in order to reconcile our account, like I said, I'm going to want to start with my checking account first. So I can select that from this drop-down menu. And then what I'm going to want to do is I'm going to want to enter the information that it is asking for, the statement ending balance and the statement ending date. We also want to be double checking before we start reconciling that our beginning balance matches our statement balance. So I'm going to go ahead and minimize this screen here so that you can see the checking account statement that I will be using to reconcile this account. So what I'm going to do is I'm going to enter this ending balance right here. I'm confirming the beginning balance, and then I'm also going to be entering the statement ending date. So with that in mind, our statement ending balance is $9,681.39, and our ending date is 01/31/25. Now, again, I personally really love using this 6-digit date shortcut code, especially if we're doing en masse data entry. It really cuts down on time. So if I do that and hit tab, it's automatically going to fill in the rest of the information for me. So if I click Start Reconciling right here, I am brought to this reconciliation screen. Now, a couple things I want to call your attention to. First, if you are using your bank feeds, this is one of the areas where your bank feeds actually really start to pay off. It's great to use your bank feeds to cut down on data entry, to create rules, to build automation, but there is a second bonus feature that comes out when you go into reconcile your accounts. So let's go ahead and look at that now. If I look at all of the transactions that are listed here, all of the transactions have these little green boxes. That means that they were automatically brought over from the bank feed, and as a result, QuickBooks recognizes them and will automatically mark them off if it thinks they belong within this statement period, okay? Now, for this particular example, that worked out wonderfully. There are sometimes occasional examples of when this might not work. So we can see here the date of the transaction and the cleared date are the same for all of these transactions. Occasionally, there will actually be a bit of a difference. Sometimes a statement might clear a day later. Sometimes there are just various things that happen. Sometimes a state or a transaction, even if it is dated correctly, might technically fall after a statement ending date. This is especially common with credit cards. So every so often, you might have to unmark a transaction at the bottom or something to that effect. Either way, we are always looking for this $0.00 difference, and we have achieved it here. Now, if for any reason I didn't have that, there are some troubleshooting things that I could do here on this screen to fix that. So the first thing would be I would want to make sure that all of my payments matched up with the withdrawals that I was seeing on my statement, and that all of the deposits matched up with what I was seeing on my statement. If those two things are true, I also am going to have to look at some other items. For example, I might have made a fat finger error when I was entering the statement ending amount or date. Both of those things could throw this off. Now, that is not the case here. Fortunately, for this particular example, we have reconciled out perfectly. The final thing that I'm going to want to confirm every time I go to reconcile an account is whether or not every single transaction is marked off here. Okay, ideally, we're going to see every single transaction being marked off every month. And if a transaction has not been marked off, we would want to know why that is. So an example of this might be a check. If you wrote a check on the 31st of the month and dropped it in the mail, it's unlikely that the person received and cashed that check already. That would be an explainable difference that we could see, and we would anticipate seeing that check clear in subsequent months. So that could be a reason to have a slight difference or to have a transaction here that was not checked. We would want to keep an eye on that and make sure that it was marked off in a subsequent month. Anyway, this is how we go about reconciling our accounts. So once this is done, once we've confirmed that everything matches up with our statement, once we see that all of the transactions are marked, we can go ahead and click Finish Now. And that will generate a reconciliation report. Now, I'd want to move on to my next account at this point. So now I'm going to go to my savings account. And I have that statement right here. So again, the beginning balance is 0. That's great. My statement ending balance is $101.40, and my statement ending date is 01/31/25. And again, this is another one that ended up working out seamlessly. We have a $100 deposit, which came from the business checking account, and we also have $1.40 of interest that was earned. Since both of these transactions were added from our bank feed, we have these little green boxes here, and we don't have any transactions hanging out here that have not been marked off. So all of that is wonderful. We're all set to go on this at this point. So we can go ahead and click Finish Now. Okay. So for the purposes of the credit card, I actually do want to go ahead and work through one more month of the checking account and savings account and do those reconciliations so that we can then move on to the credit card. And the reason for that is that the credit card in this example has a statement ending date or a statement range of the 11th through the 10th of every month. And since that's slightly off cycle, I want to get everything through the end of February reconciled so that when I reconcile the credit card, I'm already caught up to that point as well. So I'm going to go ahead and do another round of the checking account and another round of the savings account. And I will go ahead and circle right back to you guys. So this is a good example of why I want to be double checking and reconciling my accounts. We can see here, we actually have a difference of $0.00, but when we look in the line here, we actually see two transactions, both for $958.89 and both going to the American Express business credit card. Now, what does this tell me? Well, while QuickBooks has made strides and has definitely improved the pair and match functions in the bank feeds to help cut down on duplicate transactions like this, it is still something that we have to keep an eye on and make sure that if there is an error, we're addressing it at this point. So here is what is happening. Basically, we had our checking account bank feed where all the transactions were flowing through. And this transaction right here, the one with the little green box, was added from the checking account bank feed. And it was mapped over to the American Express credit card account. However, when we had the American Express bank feed open, the exact same thing happened. So instead of QuickBooks knowing that those two transactions were actually one and the same transaction and matching them up, it created two parallel transactions that basically just pass each other and don't communicate with each other. So we have to now go through the process of telling QuickBooks that these are the same transaction and we need them to be matched up. So how do we do this? Well, there are a couple of different approaches. You can do this either in the checking account register, since that's where we are, the checking account bank feed, or in the credit card bank feed. Either one will work, but we are going to have to go and visit our bank feed, whichever one we choose, and find this transaction. Okay, so let's go ahead and do that. You're going to go right over here to bank transactions and then into the checking account. Okay. Now I have to go and find that payment that was made. So I'm going to go to the posted transactions because that's where it is. And I'm also going to go ahead and filter it down a bit because I know it happened in February of last year. All right, so now that I have that, I'm going to go ahead and look for that transaction, and here it is right here. We have that credit card payment for $958.89. So what I'm actually going to want to do to ensure that these two transactions get matched up and don't cross each other with creating two parallel transactions, I am going to click undo right here. And as you can see, that actually pulled this transaction back to my pending screen. So I'm going to go and click on pending. And then because I know this transaction actually exists in the register already, I'm going to click on match right here. And I'm going to try to find the match for it. And we can see that comes up right here. We have the payment, it's the correct date, and it's the correct amount. So we want to go ahead and match these two transactions. And you'll see what this does when we get back into that reconcile screen. So I'm going to go ahead and in order to navigate back to the reconcile screen, we can either click reconcile here, or if we are in our bank register, we can click reconcile right up here in the upper right-hand corner. And you can see it immediately takes me back in because I did have a draft version of this reconciliation going. Now we can see here, now that we have matched those two transactions up, we only have one transaction for $958.89, and we have no unmarked transactions here, which is what we ultimately want to see. So since all that has now been sorted out and is all taken care of, I can click Finish Now. I'll go ahead and go to the savings account now. And we'll reconcile that for February as well. Okay, so our beginning balance matches up. Perfect. That's exactly what we would want to see. And now we have to enter the ending balance. And start reconciling. So again, this is exactly what we would hope to see as we're going through and reconciling our accounts. All of the transactions are marked, and the beginning balance and the beginning balance matched up, and then the statement ending balance matches the cleared balance. So we can go ahead and hit Finish Now. All right, so now that we've reconciled through the end of February, I'm going to go ahead and jump over and start reconciling that credit card. Now the credit card statement, the first one, ended in mid-February. So that's part of why I wanted to kind of go through this piecemeal to make sure that everything was matching up. And as you can see, we already had an instance where two transactions hadn't matched. And it's just nice to be able to resolve all of those each month as we're going along so that we are familiar with the numbers that we're looking at. So let's go ahead and navigate to the credit card here. And we'll go ahead and pull up that statement, which is this one way at the back here. Now, again, it had a beginning balance of 0, and the ending balance is $958.89. All right, so this is a perfect example of where we might need to do a little bit more digging and a little bit more research to resolve a difference that we're seeing on our statement. Now, right here, we see that all of the transactions are marked off, and the only difference is $51.70. Now, if I were off by this one specific amount, the absolute first thing I would do to troubleshoot this difference is to look at the statement and see if there are any transactions for exactly this amount. While it is rare, sometimes your bank transactions feed will not pull through all transactions. So every once in a while, you may have to manually enter a transaction. But more likely, there might just be a transaction hanging out in our bank feed waiting to be classified. But in order to ensure that that's the case, I do need to make sure that this isn't due to some other error. So I'm going to go ahead and minimize this here so we can look at that statement. And sure enough, we have a transaction right here for $51.70. And that transaction is not currently listed right here. So we would want to go and find out if that transaction is in our bank feed and needs to be added. So we'll go back over here to bank transactions, and we'll go into the American Express credit card. And if we're looking right there, sure enough, we have the one transaction for $51.70 that needs to be added. So if I post this transaction and then go back to the Reconcile screen and click Resume Reconciling here, my difference is now 0, and we have all of these transactions marked. So that is exactly what we would want to see. Now, basically, what we're doing here and what we're doing throughout this whole process is we are double checking everything that we have done on our books, okay? And this all flows through to our profit and loss and balance sheet respectively. So any expenses or income that we're recognizing here flow through to our profit and loss. But because all transactions hit more than one account, for example, if we receive income, yes, our income increases, but that money goes somewhere. So we have to show that it came into a checking account or a savings account. And that means that that connected account on our balance sheet will also change as we increase or decrease the funds available. So reconciling is the way that we ensure that all of these different accounts are communicating together as they should be, and that the data that we have included on our books is complete and correct. So now that I've walked you through a few of those different examples for how we might do some troubleshooting, I'm actually just going to go ahead and work through the rest of this year, and then I'm going to show you a few little tips and tricks that will help as far as making sure that all of the information is ready to go for your CPA so they can file your tax return. This is an example of where going through the reconciliation process and catching things is something that might come up and that we might need to resolve. Now, this is a very mild example. It looks like there were a few voided transactions here. They have zero value. There is nothing actually occurring with these transactions. But because they did at some point hit this checking account, we actually do want to go ahead and clear these transactions out. Now, we'll talk about stale transactions at another time because that really kind of is its own animal. As far as voided transactions go, however, there is really minimal effort required on our part. Because these transactions did not come through the bank feed, we don't have the little green boxes, and therefore they were not marked off automatically by QuickBooks. However, again, since they have $0.00 value, we can just go right ahead and mark these off, and you can see it makes no change to our difference and therefore our ability to reconcile. So anything like that that is voided, while you might want to do some research and find out why it was voided, if it's something that you are familiar with already and know about, you can just go ahead and mark off a voided transaction and continue to move forward. If for some reason you don't mark off a voided transaction when you're reconciling, like I just did, that transaction will continue to show up on this reconciliation screen until you do reconcile it. So again, as long as you're aware of what that transaction was for and why it was voided, you're fine to just go ahead, mark it off, and move on. draw your attention to here, because it is something that might come up when you go to turn your books over to your CPA for tax prep purposes, is if you have any accounts, and that could be loans, credit cards, even checking accounts and savings accounts, although I will say that is less common. If you have any account that runs on an off-month cycle, so for example, like this one, where our statements usually run from the 11th of the month to the 10th of the next month, you are going to want to go ahead and reconcile through to the early January statement. So I have that up right over here. I'm going to go ahead and reconcile through to that particular month. Now, one quick thing that I'll show you here, and this is also pretty cool, is that once we get into working in the current year, so I'm now reconciling for January 10th of 2026, and we are still in 2026, I can actually go ahead and just enter the 4-digit date code. So January 10th, 0110, and if I hit tab, it's going to fill in the rest of that information for me. So I'm going to go ahead and reconcile this. Fantastic. We see all the green boxes, all transactions marked off, and a difference of 0. That's exactly what we want. I'll go ahead and hit finish now. And for all intents and purposes, my bookkeeping and reconciliation are now done through the end of 2025. All right, now that we've gone through all of those steps and reconciled all of our accounts through the end of 2025, I want to show you what that has ultimately done for our books. Now, if you'll remember way back at the beginning of this video, we took a look at the balance sheet in this particular file, and we were checking to see if there were any red flags on it, one of which was the possibility of having negative balances in our accounts. And if you'll remember, we did actually have a negative balance on our credit card at the time. Now, it turns out that was due to a couple of different things that were at play. One, we did have a payment that got duplicated against that credit card. We resolved that difference when we were reconciling. We also had some missing transactions for that credit card, things that were hanging out in the bank transactions tab that hadn't yet been added onto our books. So as we worked through reconciling our accounts, we figured all of those different things out, got everything added and matched as it should be, and now our reports should be complete and accurate. So let's go ahead and look at what our balance sheet looks like now, and then we're going to take the slight additional step of comparing that to our statements that we have available to us. So if I click right over here on Reports and Standard Reports, and then go to the balance sheet right here, first thing I'll want to do, of course, is change it from this year to date to last year, because we've only reconciled through the end of 2025 so far. So I can just scroll down and select last year, or if I wanted, I could enter the dates right here. So we see we have all of this information. Let me go ahead and pull up the statements. So as of 12/31 of 2025, this is my checking account statement. I have $65,858.90, and that is what my balance sheet is showing. For my savings account, I have $3,530.31, so those two numbers match up as well. And then what we'll have to do a little bit of kind of playing with this for the purposes of the credit card, because when you have a credit card or any item that doesn't run on that month-to-month amount, or on that month-to-month date cycle, you're obviously going to see that the balance sheet doesn't quite match up with the statement balance because the date doesn't match up. But if I were to go ahead and change the date here to 12/10 of 2025 and then run the report, we would expect to see that it matches, and that's perfect. It does, it matches up, okay? Now we could also go a step further and look at it as of January 10th, provided that we have reconciled, but at this point, I've proved that I have entered all of the transactions and done everything that I need to here. So why is this important? Why are we doing this? Again, it speaks to complete and accurate data. When we went through the reconciliation process to get all of these numbers to line up with what we're seeing on our statements, we caught errors that were made in the data entry process that needed to be resolved. Some of that was duplicate, some of that was omission. We got it all handled and sorted out, okay? On top of that, your CPA is likely going to be checking all of these numbers. So CPAs do work papers as they are preparing your tax return to make sure that what they are in turn reporting to the IRS is complete and accurate. So that's why they ask for all of your statements. That's why they ask for payroll reports. That's why they ask for loan documents. All of these things contribute to complete and accurate bookkeeping. And CPAs want to make sure that all of the information is correct because they are taking on a professional liability by reporting this information to the IRS on your behalf. So that's the long and short of it. This is why reconciling our accounts is so important. I hope you found this useful. If you did, please do like and subscribe. And if you have any questions, please don't hesitate to reach out.